Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. And today was a very interesting day. And like I be saying, I be telling y'all. I told y'all a few days ago, we can actually, let me check here on what day I told y'all specifically. I told y'all 5 days ago that this is what you need to do once we hit that all-time high. And I told you right then it was time to rebalance and take some of your money out of tech and kind of spread it around. I told y'all that. This is exactly why. I also told y'all about Apple and why you were going to lose money on it on the next few days based on history. Well, either way, you would have lost money on Apple and a bunch of other tech stocks. Today, the Dow plunged, which we know Dow Jones is 30 largest companies. Some would say the most important companies. It fell 1,000 points. We haven't seen this since June. And this little 1,000-point swing, this was the normal, if y'all remember back March, April, May, and of course, June. So let's scroll down and see exactly what happened. So we dropped 950, more than 3%. Apple fell 7% today. 7%, which is, again, a good year for just the stock market in general is 7%. That's what some people say the average is. For you to lose 7% in Apple in a day, that's painful, especially for people who just went and bought it based on the stock split. And it's why I put out the video to warn you guys that you might lose money within the next 2 weeks. Lo and behold, it happened the very next day almost. Now, again, that doesn't sour me on Apple. I don't think if you own Apple, I don't think you should sell it or panic or do anything special. But I did want to point out to you that we did expect this. We didn't know it was going to happen like this, and I didn't know it was going to happen across the board, but this is exactly why. Go back and review that video from 5 days ago where you saw how I suggested that some people should take money out of tech and put it in what some people would say safer, more stable stocks like Costco, Walmart, Dollar General. Spread it around a little bit and don't be always so tech heavy. I have tech. I think everybody should have some tech, but you don't want to put 100% of your money in tech because this is what happens. So Apple fell 7%. Amazon and Netflix were down at least 5%, along with Facebook, it says. Microsoft down 6.7%. Google down 5.6%. And the tech sector as a whole fell about 6%, as you could see here. In its first losing streak in 11 days. People forget, like, it wasn't always this great. And for the last 11 days, everything had been going up and up and up. My uncle, shout out to my Uncle Travis in Cedar Hill, Texas. He suggested we do a video on Zoom, which I did want to do yesterday, but we had one that was already set up. And Zoom, I think Zoom was up like 40-something% yesterday, which is amazing. I think Zoom is not an investment for me personally, but it is a good company. I'm just curious to see where they're going to go after the pandemic and after things return to normal to a degree. However, Zoom was down too. I don't know about how much, but it doesn't show me here. One of these articles I have pulled up, Zoom fell significantly too. I don't know if it was 10% or so, but it was a tough day today. But if you're a long-term investor, it's not something you should really concern yourself with. It is something that we talked about. This is why we talk about what we call rebalancing. Even in the Investor's Toolkit, which you should sign up for if you haven't already, even in the Investor's Toolkit, we have an entire section on rebalancing because it is very, very important. I'm trying to see where it is. We added some new sections too while I'm on it. Quick commercial break. We just added this brand new section on options and everything you need to know about trading options and buying covered calls and things of that nature. All that is here. If the market was down as it was today and you traded put options, you might be all right. And that's what I did. I was like, look, market's going down. Let me get a put option. I'm gonna be okay. So that is in the Investors Toolkit, and that is brand new. We just finished uploading everything on that portion today. All right, so a part of the rebalancing process is actually in module 6 and 7. As you see here, there is a rebalancing tool and a link to it because this happens. And you want to be in the right positions to make money, but you also want to be in the right position to protect your money. Everybody who was only in tech were not happy today. A lot of people lost money today, and that's okay. It's one day. It is one day. You want to make sure that you have your savings. That's what it's for. You don't put money in the market that you need to pay your bills. That ain't what this is for. This is for long-term wealth, for generational wealth. So to make sure that you have those buckets in the right place. And the bucket that you have in the stock market, you want to have your money, as I've stated multiple times, have some in tech, have some in consumer goods, stuff like, you know, Walmart. Y'all have heard me say this over and over again. Y'all know what I'm talking about. But make sure you have those buckets in place, because while a Microsoft or an Apple or a Netflix fell 5, 6, 7%, stuff like Walmart and Costco may have only fallen like 1 or 2%. Costco specifically only fell 3. That's half. You are cutting your loss in half by investing in something that people are going to have anyway, and is not going to have the high ups and downs. Now, the next question that some people are going to ask, well, it's down, should I buy more? You know, buy low, sell high. Yes and no. Yes and no. Buy if it's quality, but more importantly, don't try and time the market and hope that today is the right time or tomorrow is the right time. Like I said, whether it's the first of the month or every 2 weeks or every month, I'm getting in on the same date, on the same schedule, regardless of what happens, and I'm going to hit it by default. I'm gonna hit it by default. So don't get overly concerned, because when you try to really sit here and focus on, I need to get it today because it's down, then on the opposite end, you're like, oh my God, I need to get out because it's so high right now. If you were someone who had that philosophy and had Zoom when it was up 40% yesterday, you would have said, oh my God, let me just get out now. And 6 months from now, Zoom could be, you know, off the chart somewhere else. But it also tells you how to manage your expectations and to manage your emotions. Yesterday, and I think I may have taken a screenshot of it. I don't know if I posted it or not, but we had like 5 or 6 of my favorite stocks all hit all-time highs yesterday. And I'm trying to see if I A, took that screenshot, and B, what those stocks were, and I didn't, which is probably why you guys didn't see it. But I know Amazon hit an all-time high the other day. Facebook hit an all-time high. Microsoft may have hit an all-time high all yesterday, yesterday or the day before, which is all great, right? People are like, oh my God, it hit an all-time high. It's the greatest thing ever. And then today is like, ooh, that really hurt. So this is a part of what happens in the stock market. It is relatively unpredictable in the short term. That is the key phrase there. It's unpredictable in the short term. You never actually know what's going to happen from day to day or week to week. But from year to year, it becomes a lot easier and a lot more predictable over the long term, which is why we invest. We should be investing and thinking about the long term. What I think about Apple now is what I expect over the next 5 years. What I think about Microsoft or Netflix or even Disney, what I'm thinking about now is where are they going to be in the next 5 years, and I make my decisions based on that and based on the information that I have today. That's the best we can do. And more often than not, the longer you look out, the longer you hold, the longer mindset you have, usually you are going to be better off more often than not. But if you just got in, oh my God, stock split, let me hop in here and let me hop out to go, I don't know, pay my bills or whatever, that's a dangerous game to play. It's a very dangerous game to play, as you can see today. So it's why we don't do a lot of day trading content. That's why it's very hard to day trade, because you don't know when stuff is going to happen like this. And I don't know what's going to happen tomorrow. I have zero predictions about what is going to happen tomorrow. It's a Friday. We're going into a holiday weekend. It could be a great day. It could be a terrible day. I don't know. I have no idea. I have no idea what's going to happen in the election in 2 months. That's an event. That's the last event on my calendar that I'm like, the market could do something. I don't know what that thing is going to be. But again, it don't matter. It don't matter. We did that video yesterday on why I feel it doesn't matter. Your job is to stay consistent and to stay unemotional, or as unemotional as you can. All right. So before we sign off, I wanted to go back real quick and see if I could cover one other thing, because I know I saw Zoom on here, and I want to talk about that just a little bit. All right, so you can see here, Apple down 7%, almost 8%. Tesla's down close to 10%. The market, at the time we're recording this, the market is still open, so this can still change. Surprisingly, and I don't know why this is the case, Macy's is up 7%, and Carnival Cruises is up close to 5%. And you can see it changing down here in the corner as well. I don't know why. I tried to find out what's going on and why the market is doing what it's doing. A lot of people don't have a clear answer for that. The market can be unpredictable. It just can. We did have some unemployment data that came out that was not great, but we've seen worse, and the market didn't do stuff like this. So it just seems to be some weird blip, but it we see what happens. So let me. I don't want to scroll here. This is what I want to do. So we got some more. Nvidia down 9%. One of my stocks has been on my watch list for quite some time. Zoom down 10%. I'm gonna click here. And let's see, hit the last 5 days, because I know Zoom had that crazy spike. And the reason Zoom had that crazy spike was because I don't know if it was earnings or just an announcement, but they had done like 4 times the revenue that they had done over the last, I don't know, they announced they did like 4 times better in the last quarter than they did like all of last year, or something ridiculous. But you can see here, it just really took off and starting to cool back down. Long term, Zoom will probably be fine. I just want to see more history, and this is personal. I would like to see more history and see how sustainable this is going to be. I'm always curious to see how you do once competition starts to step in and how well you fare. And this is something that you could also say for Netflix. Netflix, other than Blockbuster, they were fine and continue to be fine. But now you have Disney Plus. Now you've got the NBC app and the CBS app. You got HBO Go, and you got all these competitors in here now. So how sticky is Netflix? Who's to say that I'm not going to cancel my Netflix and only do Disney Plus, or cancel both of them and only do Hulu? I don't know. So we'll see what happens there with Zoom. And I think, you'll probably make money on it for the next 2 years, probably. But they are relatively young. I want to see how they're going to do over the long term once Microsoft kind of steps more in that territory, which they already have. Facebook has already stepped in that territory just a bit. So I'm just curious to see where it goes. This is recorded on Zoom, which is great. So they got my money. But also, I can only have but so many tech companies, because I practice what I preach, because I can only have but so many. And you guys saw that I added Adobe. So there's that, right? So all that is out there. I'm curious to see where Zoom goes. I'm definitely rooting for them. It is one of the few IPOs that has done well within that first year. We saw how bad Uber, Lyft, Snapchat, Beyond Meat did do well and then fell off. They're still relatively high. So you can see all that stuff. All right, so that is it for me today. One, share. I keep forgetting to tell y'all to share. Sometimes I'll put it in the comment, but do share, because the stuff that we discuss here 5 days a week really has an impact on what happens in the market and how you react with your investments. Because I'm telling you now, again, I can't predict the future, but we talked about why you don't want to have everything in tech. Lo and behold, tech was the biggest thing that failed today. I told you how Apple was likely to fall within the first 2 weeks after the stock split. Apple was down 7%. So I am doing my best, in helping you to grow and protect your money. And one of the ways that we do it, other than the 5 videos a week on Instagram and YouTube and here on Facebook, is to also provide you with the Investor's Toolkit, the premier course, and it's the easiest step-by-step investing guide on the planet, period. So do check it out. Click the link above to sign up for it. We have some amazing reviews. We have students on here all the time that say it's great. You guys saw, because you guys brought this up, y'all wanted me to talk more options. You wanted me to teach options. So I actually took that concept and added it to the Investor's Toolkit because y'all ask, and that's the type of teacher, leader, whatever you want to call it, type of teacher I am, where we do go back and update stuff. I will take things out, put things in, because it's, hey, look, I really didn't understand it the way you taught it. Could you do it a bit better? We go through and add those. So I appreciate y'all for coming out. Thank y'all for sharing the video, because I be telling y'all. So make sure that you do that, and I will talk to you guys later. Bye.